Welcome back to Fast Money. Trulieve out with earnings before the bell. The marijuana company beating on the top and bottom line, but shares still ended the day down nearly 3.5%. For more on the results and the state of the cannabis industry, let's bring in Trulieve CEO Kim Rivers. Kim, thank you so much for joining us here today. What would you say are the big drivers of this quarter, and why were investors disappointed here as your stock ended the day down 3.5%?
Yeah, I don't know that I can comment in terms of, the volatility of the market. The cannabis sector is an interesting one in that we are, of course, listed on the CSE and not able to be listed on a U.S. exchange yet with respect to, NASDAQ or, of course, NYSE. So it is a bit of an interesting market to watch, and hopefully someday soon that will change. What we're focused on and what I'm focused on every day is the fundamentals of our company. Of course, we had strong growth, both top and bottom line. With 44% EBITDA margins, strongest EBITDA of the sector, and of course also looking forward to our big acquisition coming to a close here soon with our Harvest shareholders announcing that transaction or successfully approving that transaction yesterday. That combined company, once we are closed, if that were closed today, would head and shoulders be the strongest company, the leading company on literally every metric, both operationally and financially. So we feel like we're very well positioned to take advantage of future catalysts and growth opportunities across the U.S. as the leading U.S. operator.
Hey, Kim, it's Tim. Congrats on great numbers. And it's funny because you have industry-leading EBITDA margins, and on some level you're penalized for that. Can you? The sense is that as you guys continue to expand on a national level, that your margins are going to suffer. Can you talk about that profile? Because again, right now you are at the top of the heap.
Absolutely, Tim, and thanks for the question. I think that it's an interesting position to be in, right? And we actually had a different strategic approach to growth than our peer set, in that we wanted to make sure that the fundamentals of our company were sound. We wanted to make sure that financially we had a strong and defensible position, that we were growing the right way. And again, not just top line growth at all costs, but we're building a sustainable company. And so, which we've done. And as you mentioned, we've had industry leading margins. Certainly as we look to expand, which we've signaled that we are going to do across the U.S. to become the leading U.S. operator, again, in all metrics across the U.S. Certainly as we look to new markets, as we're developing markets, as we're looking to enter wholesale markets in a more robust way, absolutely there will be natural margin compression. However, and I think that this is important, you're talking about, again, in terms of the gross margin, you're talking about a 67% margin. So it is a bit and can be a bit frustrating. But you know what? We wouldn't have grown the company, I don't think, any other way. We know that we've got a very strong business that's really rooted in fundamentals at our core. And we're just going to continue to perform and continue to execute because that's what we do.
Kim, how do you attract a new user to your product? Someone that maybe is an adult, is well educated, is interested, but still has a little bit of apprehension. I mean, isn't that someone that could be a key target for you? How do you convince them, get them over the edge? Perhaps a friend, someone I know,
I'll give you my number. I think it's important to note that there are strict limitations in terms of how we can communicate as a cannabis company in the U.S. today.
Right.
So we do a lot of education. That's really our primary method of communication, and we educate physicians very regularly. We have a team of educators that go out into the community. We also do a lot of face-to-face education, whether it's groups and organizations in the community, as well as, of course, social media. So social media and digital is one of our larger communication platforms. We host educational seminars called True Talks. And really, we do try to lead with education because we do think that it's very important. And we think more and more Americans are interested in taking their health and their wellness and their state of mind and well-being into their own hands, which, of course, our product allows them to do. So we try and get in front of as many people as we can. And really, I would say that our Truliever community, our current consumers are our best advertisers. So, it's our job. We have strong loyalty metrics, over 75% strong repeat customers, and they love to talk about our product. And quite frankly, that's the best advertising that we can do, is have a strong product that works well, that people want to talk about and tell their friends about.
Kim Rivers, CEO of Trulieve, thank you for joining us here today.
Thanks.
I'm going to tip it over to you, Tim. I know this is a sector you're interested in. What about this company in particular?
Yeah, full disclosure, I have a core position in Trulieve in my cannabis ETF. And the things that Kim's talking about in terms of the addressable market growth, some of it is coming from demographics that are really either folks that have never had any relationship with the plant or folks that actually have been very negative on the plant. But if you look at the addressable market for cannabis in this country, state by state, they continue to come online. And so there's been a lot of disappointment in the markets. And Kim was asked about her stock performance. Look, cannabis stocks are down 30 to 40% off the highs, yet this week we're in the middle of U.S. earnings season for cannabis companies, and the sequential growth is anywhere from kind of 5 to 20% off of a very high bar. Year over year, you're talking about 100 to 150% growth. So these companies are growing, they're profitable, but most folks can't invest because some of the big institutional capital is not in this industry yet. So folks that are investing now are actually in ahead of a lot of big institutional capital. It's an interesting time.
It is. It really is. There's a lot more to learn about it, I think, at least for me.